Hello. Well, it is official. The tax bill has officially passed. The president signed it into law just before he headed out of the White House for vacation down in Florida. He signed it without any big ceremony, just really quietly. But the fact of the matter is, we have now had the most sweeping update to the United States tax code in over 30 years, and the date, December 22nd of 2017. It is called the Tax Cuts and Jobs Act, otherwise known as H.R. 1. The House passed it a second time. It's a technicality. They passed it December 15th, but then they violated some provision in the reconciliation framework, and so they had to go back and pass it again. But on December 20th, it is official. Now, except for one or two exceptions to this tax bill takes effect January 1st, 2018, and most of the provisions in it, a lot of the provisions in it, sunset at December 31st of 2025. So it's not a permanent tax change, but it is indeed sweeping. I'm going to do my best to give you at a very high level the overview of these changes that this makes to our current system. On the individual side, there are 7 tax brackets. There will still be 7 tax brackets under the new law, but the 7 tax brackets will be reduced. And so effectively what that means is that your tax brackets for every American, even the most wealthy Americans, all the way down to the poorest Americans, will go down. The top tax bracket currently is 39.6. Under the new provision, it will be 37%. So it literally will reduce the marginal tax brackets of every single American. Now, that doesn't mean the effective true tax rate for every American will go down. Some will go up, but technically the rates go down for everybody. The standard deduction has nearly doubled, which is good because a lot of the itemized deductions are going to be reduced or some of them eliminated, like the state and local income tax deduction paired with the deduction people get for property taxes. Currently, there are 2 separate things. You can deduct if you itemize your income tax for the state and property taxes, but now they're consolidated into a cap of $10,000. So your cap is $10,000 for both deductions combined. The child tax credit has been doubled. It's currently set at $1,000. It's now going to go up to $2,000. The phase out is fairly low currently, but the new phase out will be tripled almost. So virtually almost every American will not phase out of the child tax credit. That's going to be an improvement for a lot of Americans. And why is that? Why are they making it so good? Because they need to make up for other changes that other provisions they eliminated, like the dependency exemption. You can't even claim your kids anymore. So that's kind of, I think, why they're being so generous on the child tax credit. Many of you have asked us about the mortgage interest deduction. Currently, you can deduct mortgage interest on up to $1 million of mortgage debt. That is going to be reduced now to $750,000 of mortgage debt, and that is only on new mortgages. A lot of people have been confused by the pass-through deduction. If you are a self-employed individual, or you have a partnership, or you have an S-corp, currently there's no preferential tax, but there will be under the new law. It is going to be you're going to get a deduction for 20% of your profit, but that deduction is not available if you are in various certain industries, like service-based industries, which unfortunately covers a lot of people. Folks, this seems really simple, but there is an immense degree of complexity under the hood with this simple 20% deduction off of your pass-through business profit. It is nowhere near as simple as I'm making it. Is going to be really complicated. The corporate tax rate, if you're a C corporation, is currently 35%, one of the highest tax rates in the world, is going to go down to a flat tax of 21%. I have friends overseas in various overseas countries, and they have already told me that their national news networks are already saying that a lot of the companies over there are already talking about relocating here. Expensing. Currently, businesses can deduct upfront against their profit up to $500,000. That is going to be greatly enhanced. It's going to quadruple, and that is going to be only good though for 5 years, and then it goes back to the old ways. Unfortunately, this enhanced write-off, upfront write-off, does not apply to restaurant taxpayers. Internationally, we're going to move to a territorial system, which means effectively that profits earned abroad should no longer be subject to tax. There's currently not a repatriation tax. There will be. Obamacare, the individual mandate, the penalty for not having health insurance that currently is assessed against you. That mandate will be repealed. But watch this. Not effective January 1st, 2018. After 18. So there's a delay in that. The estate tax nearly doubles the exclusion. The estate tax itself, though, unfortunately is not repealed. Educational tax incentives. There are currently 2 different educational savings plans and 7 other tax or educational incentives in the tax code. We're going to consolidate and simplify all these. And we're also going to let you now use 529 savings account dollars to pay for primary and high school, K through 12. And finally, the AMT, the most dreaded tax in probably the entire tax code. Good news for if you're a corporation, a C Corp, that's been repealed. Bad news for individuals, it's here, unfortunately, to stay. The good news, though, is the exemption for that you get on the individual side before you get soaked with AMT is going to go up approximately $20,000. That is just scratching the surface of this new tax bill. It is incredibly complicated. A lot of people ask us, well, are we scared that with this tax simplification we may be out of a job? Anything could be further from the truth. In fact, it's probably going to help us grow a lot because everybody's going to need us now. The complexity on a simple tax reform overhaul is anything but simple. Overall, though, if you get a W-2, no matter what income level you are, you're probably going to see come your February paycheck that more is in your take-home pay. That'll feel good for a lot of people. A lot more to come. We'll see how this all plays out, and I'll keep you posted. Thanks for listening.